Today at Petrochemical Strategies, family matters. Today we talk about families, specifically the family of cracker feedstocks called natural gas liquids or NGLs, and how one sibling, ethane, drives the family dynamics. It is the 8th day of June in the year 2021. About a decade ago, the U.S. shale revolution was in its infancy. To get a better understanding of the impacts of shale in the U.S., the Energy Information Administration commissioned INTEC to study the amount of technically recoverable shale gas and shale oil in the lower 48 states. This chart is from the U.S. Energy Information Administration and was published in July of 2011. The proliferation of activity into new shale plays increased the dry gas production from 1 trillion cubic feet in 2006 to 4.8 trillion cubic feet in 2010, or 23% of total U.S. dry gas production. In addition, wet gas reserves increased to 60 trillion cubic feet by the end of 2009, which accounted for 21% of the total natural gas reserved. The INTEC study, which I mentioned earlier, identified 750 trillion cubic feet of technically recoverable shale gas resources, most of this located along the U.S. Gulf Coast and in the Northeast. We all know what happened next. There was a massive increase of investment into ethane cracking, which increased the U.S. nameplate ethylene capacity from around 50 billion pounds per year to around 90 billion pounds per year. At the same time, a huge amount of ethane was hitting the market coming from these natural gas wells. Although ethane is a very interesting story in itself, ethane has its siblings. Natural gas liquids are those hydrocarbons in natural gas that are separated in the process of fractionation. The EIA defines natural gas liquids, or NGLs, as ethane, propane, isobutane, normal butane, and natural gasoline. So this got me thinking, with all of this ethane coming to the market from the shale plays to fill the needs of these new ethane crackers, what is happening to the siblings of ethane, namely propane, normal, and isobutane, and natural gasoline? That is why I turned to industry expert Peter Fasullo to ask these questions. Peter has spent over 40 years in the midstream, refining, and petrochemical sectors. In 1999, he co-founded En Vantage, an energy investment and advisory firm which consults for a wide variety of companies in the energy space. Peter has been a staple on the speaking circuit, giving a number of keynote speeches and presentations at industry conferences and to Wall Street firms. Prior to founding En Vantage, Peter spent several years at Valero Energy, ultimately as the Senior Vice President of Corporate Development, and before that at MAPCO, where he helped merge the company into Williams. He is a former director and board member at American Midstream Partners, and currently is on the Rice Engineering Alumni Board of Directors. Peter is a native Houstonian. He earned his Bachelor of Arts and Masters of Chemical Engineering from Rice University, and has a Masters of Business Administration from the University of Houston. Here is my conversation with Peter. So hello, Peter. It's good to see you again.
Nice to see you too, Robert.
So let's jump right into it. Tell me a little bit about En Vantage, the type of clients you serve, and the types of outcomes you provide to them.
Okay, we founded En Vantage in 1999. It's 22 years old. We consult with midstream companies, independent producers, large multi-international companies. We also consult with investment banks, hedge funds, and private equity groups. We do both market analysis and strategic analysis. We've also done M&A work, expert witness work, and just a host of things around our expertise in oil, gas, and NGLs.
So Peter, the U.S. natural gas liquids market is in the middle of a major shift with a wave of new ethane crackers already running and more to come. What do you see from a macro level for ethane supply and demand balances and prices?
The major shift in terms of what we're seeing on the petrochemical side really revolves around ethane. The other NGLs are seeing their own type of shift, but in terms of ethane, obviously the petrochemical industry back around 2010 was trying to make a decision whether they should really expand their capacity based on ethane cracking. And since that time, they've added, gone from about 55 billion pounds a year of capacity almost to 90. And that's going to increase to about 97.5 billion pounds. All that is on ethane. And so ethane cracking capability has really expanded in the last 10 to 11 years. And so that's good news for ethane in the sense that supply-demand balances should tighten. And that's because we're in another shift in the sense that we're not growing NGL extraction like we had over the past several years. Everything's flatlined in as far as extraction. So we're hopeful that we'll see balances get a lot better and prices for ethane also to get better.
That's very interesting. How will this changing dynamic in ethane affect the other natural gas liquids like propane, butane, and natural gasoline?
Well, actually, it's not really affecting those liquids that much because the industry has made a conscious decision. And when I say industry, the petrochemical industry, to really focus on ethane. So what's happened with the other NGLs is they have to seek the export markets because we still have excess supply of those liquids. And so they're going to mainly be, cracked overseas. And a lot of cases, in the case of propane, propane dehydrogenation units are being built, particularly in China. So the petrochemical industry has decided here to go ethane and also to build some PDH plants here. But everything else it's really an export, a picture for the other NGLs.
It's very interesting. If the U.S. Gulf Coast ethane price hits like 50 or 60 cents a gallon and crude stays flat, what will that effect have on the market?
Well, one of the things is that not only one of the dynamics is not only do we have more ethane cracking capability here, but we do export quite a bit of ethane. And right now, just on the Gulf Coast, with the startup of Energy Transfer's orbit terminal in Needle in Texas, we're going to be exporting probably in the neighborhood of 250,000 barrels a day in total between Enterprise and Energy Transfer. And so if our ethane prices were to get to 40 to 50 cents a gallon, and let's say crude prices stay at $60 or even go down to $50, that would make delivered ethane, say, into Asia, not economical, compared to naphtha cracking over there. So we've never really tested that just yet. But, our ethane exports could be in jeopardy if ethane prices here were to get into that 40 to 50 cent a gallon range and crude prices, say, go down to $50 a barrel.
Well, Peter, I would like to end up on a little bit of a lighter note. I think in your career, you probably made a lot of speeches and made a lot of predictions. So
Yeah.
Can you tell me one of the predictions you made that was absolutely came true and then one that was completely way off mark?
Well, I want to start off with one that really was off mark. And it's not one particular forecast. As you look at the petrochemical industry expand and you look at your supply demand balances for ethane, you keep thinking, okay, ethane prices are really going to rise in price at some point. The problem is I've been wrong so many times. It's kind of like Lucy holding the football for Charlie Brown. That the petrochemical industry has had problems, one, getting new plants up on time, two, just the whole industry staying up from time to time. We've had two major events over the last 6 months, the hurricanes and now the winter storm Uri. And so from every time you make a forecast, ethane should go up and higher in price, you're always disappointed because the petrochemical industry, for whatever reasons, has a big chunk of that capacity out and ethane prices never go up. The one thing I would say we predicted correctly is that we would be a net exporter of liquids. And I never thought that I would ever see in my career that we would be exporting ethane, but we're exporting ethane. And when you looked at how prolific the shale plays were, you just knew that we're going to have more liquids than we could handle. So that is one thing that was right. But it's just that it's very hard to predict the operational reliability of the ethylene industry. And when it comes to ethane, because it only has one market. And so ethane can tip over very easily if enough ethylene capacity goes down.
Very interesting. I think you probably were right more often than wrong in your predictions and forecasts. So that was part of your successful career, I guess. So I want to thank you for joining me today and sharing some of your thoughts on the ethane market and NGLs in general.
Okay, thank you, Robert. Appreciate it. I hope you learned a little bit today about the family of natural gas liquids. Ethane may be the darling of the family with all the dynamics around its supply and demand balances. The other family members, namely propane, iso and normal butane, and natural gasoline, have all been successful family members in their own right, just like a regular family. Thank you for watching today at Petrochemical Strategies, and I will see you next time.